Alright guys, I'm going to take just a few moments of your time to give a presentation here on trading strategies for weekly options. As you know, it's Friday. What we're going to be doing moving forward is taking Fridays instead of doing your traditional midday live. We're going to do something from an educational perspective just to help everybody kind of step up their game with various different trading strategies. Look for a calendar on the website soon, and hopefully on the new website layout you'll see a schedule of events that we're going to be covering, and we'll also have the archives there available for you to listen to as well. So for starters here, we're going to dive right in, and with the weekly options, for those of you that have been trading them, a lot of us have been, we've been at this for a little while, but like I said, I wanted to go through this presentation so it's kind of a static reference point on the website that I can point people to that are new to weekly options or want to learn more about them. So what we'll do is we'll start off with just some quick background and statistics, which the weekly options initially started as a pilot program, and this was back in 2005. You might not have heard of them back then, but they were on very, very few products, and they were going through the testing phase to see what kind of longevity they would have. They got more and more active as years went on, but what's great about these is that the contract specifications are exactly the same as traditional options, aside from the expiry. So for everybody thinking that the weekly options are something different, that they're unique, and that, well, I can't touch them because they're different. Really in reality, they're not. The only thing different is how they expire. So you have 8 days of trading, okay? So new weekly options are issued on Thursdays every week, except for this week, as an example. This week happens to be 1 week until regular monthly options expire, right? So this being today, September 14th, next week, on the 21st, the September options expire. So they don't issue weekly options this week because you'd have 2 options expiring in 1 week, and that would be redundant, right? So today being a Friday, those front month options expire 7 days from now, and the weekly options that we had available expire today. They will die at the end of today's trade, all right? So the average daily volume totals on these things have grown exponentially since 2009. 2009, they were on very few products, but they were out there and active. And then 2010, they started approaching it on a couple of stocks, and then the growth really started to take off from there. They're available on indices, ETFs, ETNs, and over 125 individual equities. And as you guys know, the availability is subject to change, so not all stocks have weekly options. There's only a select group. But the select group, and it's my impression that what they've done is they've taken the individual equities that are most popular in terms of option trading. So your popular stocks, your Apples, your Amazons, your Googles, things like that. Now, all the stocks that they're available on are not necessarily the type of stocks you might like to trade. For example, we've got some stocks that are not so volatile. We've got some stocks that are super volatile. We've got some stocks that have foreign exposure, some tech stocks, some banks. It's just a wide variety of stocks. But they've picked these stocks, and what's great about them is that the stocks that they've chosen these on have pretty liquid options. So whether you trade weeklies or not, I've always felt that the stocks that offer weekly options are just good stocks for option trading. So I think that those stocks, which you can get a list from the SIBO, we'll talk about that in a little bit, but those should be at the core list of every option trader's watch list. Not specific to weeklies, not really because it has anything to do with weeklies, but because the products are super liquid, super popular, and good quality stocks. Okay? Let's talk a little bit about that weekly volume stats. You can see here, in 2009 where they were a pilot product, not a whole bunch of volume was traded, but then in 2010, May specifically, when they started getting more active, when people started seeing that they were available, you can see that the growth here was huge. And percent of the CBOE's monthly average daily volume is growing, and it's growing pretty rapidly. So these products are becoming very, very popular, and that's from both sides of the trade. Not necessarily from a buyer's perspective or from a seller's perspective, but just these options offer you flexibility. And that bottom line, that's really important to an option trader. So here's a couple of the basics that you need to know. As we've talked about, weekly options are listed on popular and liquid option trading instruments. But with 8 days until expiration, purchases need to be made on short-term time frames. Now, as a trader myself, one who's got a lot of experience trading these, I don't like the idea of buying the option with the idea of, well, I'm going to hold it until next Friday and just see what it does. You've got to be looking for a move there. The timing is everything, and you've got to be looking for, a good-sized move, something more than just random market fluctuations, which we'll talk about a little bit later. But your time frames need to be not a week. They should be days. They should be hours. They should be pretty short term, because about these things, if they start to pull back on you a little bit, you're going to lose a lot of value, because these options are hypersensitive, especially as you get closer to expiration, very, very gamma sensitive. So that's as a long, but as a short positions, the weeklies offer more flexibility for strategy. So option sellers got really excited about these because, now covered calls can be done on a weekly basis. Now you can get into a spread position which doesn't expire a month from now. I mean, as I'd say, somebody with not so much spread trading experience in the last year, but a lot of spread trading experience in my career, the idea that I can sell these week to week is so much better. That actually excites me more about trading spreads now, is that, well, I can put these on for just a week. If I had to, if I were still only able to put spread trades on month to month, those trades are really, really hard for me. I have a hard time sleeping at night when I have those on. But now that we've got weeklies, we can leg in and out of stuff a lot easier. They're, again, just a lot more flexibility. But as long positions, as you'll note, you must be right, and you've got to be right on time. That's wildly important. So the one thing you got to understand here is risk, okay? Just like any other option, if you're a buyer, anything you spend is subject to a loss. And as a buyer, you cannot lose more than you invest. As a seller, though, a naked position comes with unlimited risk. And for those of you with option trading experience, that's no different from what you already know. In a covered short position, your losses are limited, but it depends on the strategy, right? And the most important thing here is that time is a risk. Everybody that wants to get into trading weekly options thinking that, well, I'm just going to play, just get in and out of them. Yeah, it's a lot easier said than done. You're better off getting in and out of monthly options where you have a little bit more time on your side to be right. But time is a risk in that not giving yourself ample time for a trade to work brings about unnecessary risk. So always with a trade, you got to determine how much time you think you'll need and then look to buy more, right? With weekly options, because they can fluctuate so quickly based on the quick decay of time, if you're not getting price movement, these options are just bleeding time value. So it's important to also talk really quickly about position sizing as I think it pertains to risk. What I've always done is I will go and I have a position size in mind, 1%, which means just to use round numbers, let's say I have a $100,000 account and I'm looking to spend $1,000 on this trade. What I'll do is I'll take that $1,000 and buy as many contracts as I can, assuming that I'm going to let that position completely blow up on me, so that if those premiums went all the way down to zero, I'm only losing $1,000. Now I try to, let's say if I'm buying these options for 50 cents and I realize that the stock is broken down, it's not going to go my way, I might try to get out and maybe get 20 cents, 15 cents, or get what I can out of them and not take the entire loss, so that way it's not a entire loss of premium, but I'm at least position sizing myself that way. And if I'm able to get out with a little bit of premium left, I'm happy. I didn't take as big of a loss as I wanted to. And all this still being a very small percentage of the overall account. From a risk perspective too, should an individual go out there with a with a $5,000 account and completely spend it in weekly options? No, absolutely not. Because you might get price movement, but you might still lose money on the option because of the time decay. So that's important to take into consideration as well. So weekly option strategies, right? So again, there's nothing different than what you would do as a traditional option buyer. You can buy long calls and long puts, but that's tougher. Okay, you have to have a strong directional bias and a big move pending. What we as a group normally look for is we look for those spots where we know there's going to be a reaction among market participants. Take the Netflix trade that we were in. The way the prices had kind of wound up, we knew that if prices were going to trade above 58, they were going to get to 60 and 61 and 62 pretty quickly. Thus, that happening, that leaves us with a 200, 300%, or maybe even 400% move. But with that, I'm going to talk more about you can't just do this on any stock, and it can't just be at any given time just because you think prices are going to go up. See, I'm of the belief that as an option trader, you don't want to trade options on stocks most of the time. Most of the time, stocks are just fluctuating with the market. And we don't do that. We don't trade just random market fluctuations. We go to stocks that are going to outperform the market. As an example, we've got a lot of stocks today that are up, 4%, 5%, 6%, 7%. And the S&P is only up about a little bit more than 0.5% today. So you've got to look for stocks that, that have that higher beta, that are going to, give you a little bit of alpha, outperform the market. We'll talk more about that in a minute. But, you can also buy protective puts. So what's great about Weeklies is, let's say you've got a stock position that you've been holding and you're heading into earnings tomorrow. What can you do? Or you're heading into Friday, uncertain news over the weekend, you got to hedge your account. What can you do? Well, if you've done any insurance deals in the past, weekly options are great because they're so much cheaper than monthly options. So I can insure a portfolio for a much, much cheaper price, for about 25% of the price of what I would normally do. So event risk, right? Overnighter on earnings, over the weekend, hold to insure your portfolio coming into Monday, whatever the case may be. These weeklies are much, much cheaper, so that can be just throwaway premium if you're looking for a quick hedge. You can sell cover calls. So week to week to week premiums have a better chance of outperforming that 1 month-long premium. You can sell naked puts, but, when we get into the selling strategies, weekly options, like in this kind of environment, low VIX, low implied volatility, anytime you're a seller, you're not getting a lot of premium out of the weeklies, especially on cheaper stocks. So the only kind of spread trading or selling I would do in this environment is I would be picking stocks with a higher cost of carry, your higher price stocks. As an option seller right now, I developed a portfolio of spread candidates, my TA spreads list, and every single one of those stocks is a high price stock that tends to move a little bit. So, but generally with the high VIX and high stocks, you're going to get the best of both worlds. You're going to be able to go about 2 deviations away from the current price and still get a real nice payout for a high probability trade. We're going to talk more and more about some of these specific spread strategies in upcoming events, but we got to wait. Once volatility starts to creep up a little bit, we start planning how we're going to go about doing that with selling strategies. So I'm going to talk just really briefly from a seller's perspective and a buyer's perspective. But as a seller, the higher percentage of trades are going to be winners. Why? Because you're not going to profit on direction or timing. You're profiting on the decay of time. And that is always in your favor as a seller. Never in your favor as a buyer. Okay? Never. Gains are always limited to the premium received. And that can be problematic. But it can also be consistent. Losses are infrequent, but they're sizable compared to the average win size. So when you set up these spreads, a lot of them are going to be, 4-to-1 risk versus reward. But that's okay if you're winning at, 95% rate of success, which is entirely possible in this strategy. That's what we're going to be gunning for. And on that one trade that gets away from you, we're going to talk, about strategies moving forward about how to repair, or at least how to make things not so bad, for lack of a better word. So sellers are usually selling at the money or out of the money options, whether you want, low probability or high probability outcome. And as a seller, weekly options are just fantastic for cover call and spread trading strategies because you can get in and out of them much quicker. They melt a lot faster. So from a buyer's perspective, lower percentage of trades are winners. I honestly think it's entirely possible, even with a good amount of market experience, you can step into the weekly options arena, take 10 trades on 10 different stocks, and be wrong on all 10. This is one strategy where there's a pretty good chance that that's possible. Because as traders, a lot of us lack the plan, heading into the trade, which is I need to decide what I'm going to buy, how much I'm going to buy, when I'm going to buy it, more importantly, where I'm going to sell it, where I'm going to set my stops, and then how I might call an audible, meaning let's say the price gets up to my target really quickly, maybe it wants to go higher. Well, what do I do when it gets there? Do I sell half? Do I bump up a stop? What am I shooting for next? A lot of traders lack that. A lot of traders just kind of shoot from the hip. Well, let's go, and then when it stops going up, I'll get out. But when it stops going up and it pulls back, then right off the bat there, you give back a pretty good chunk of your gains. Take for example, Mollycorp today. Gains can be explosive. You guys have seen that. We've done easily. We've had trades, 200, 300, 400, 500%, 1,000%, 1,200%. That's not hard to do, but you've got to have the right stock at the right time, because in this you have cheaper extrinsic values and high gamma. And our strategy with some of these is to take an out of the money option and turn it into an in the money option, and find that inefficiency where options are not pricing in a big move, but we know a big move is coming. So losses are going to be frequent, but they can be small. Because these options are cheap, you're only going to lose premium. And even if you use stops or have some kind of alternative selling strategy, you can't lose more than what you put in. But generally, your winners are going to be more than what you're losing. Buyers can get more aggressive with strike selection if a big move is expected. But again, who am I to expect a big move is coming, and why is that? You got to be able to define that. So what is it that's going to trigger a big move? Has that already been priced in? And like I said earlier in the conversation, avoid holding these options until expiration. You don't generally want to do that. I don't like the idea of buying one on Thursday and holding it till the next Friday. No. There's going to be a good move if it's going up every single day. Like Goldman was last week. That's an exception. If something's going up 3% every single day for 8 days, okay, there's no reason to sell it. But if it's going up a little bit, down a little bit, up a little bit, well, you've got to define what chunk of that move are you trying to catch and be looking to sell it up, not on the pullback. So let's talk a little bit about a weekly option trading routine. What should you be doing if you want to be a little bit more active at weekly options? What should you do? So build a watch list of stocks that offer weekly options. Start from the SIBO. If you go to the SIBO website, then you go to the products tab, weeklies tab, and then they're going to have a list of available weeklies. There's well over 100 stocks. You shouldn't want to trade all of them, but just pick a few. So I'm on that list right now. I'm going to bring that over and show you. You'll see a lot of familiar ticker symbols here, a lot of stocks that obviously, and then the majority of these we don't trade. I could take 50 of these, though, and I'd want to trade those. Chipotle, Salesforce.com, Facebook, even though some of you might like it, FFIV, Green Mountain Coffee, Google, Groupon, and I picked those stocks. Why? Because based on my experiences and my preferences, I like the stock with a little bit of kick to it. I would never trade a weekly option on Intel, on IBM, on Hewlett-Packard, on Home Depot. Why? Because those stocks don't move enough to give me ample reward. If I'm going to go out there and risk my premium in such a risky asset, I got to pick something that's going to move, and I have to have an edge on being able to tell when it's going to move. These things I think we have, hence why we trade options. Select stocks that move well that you're familiar with, and then check these stocks daily for trade signals. Go to FinViz, dump these into a watch list, and then go there every day and find out which of those are offering buy signals. So let's say, for example, I'm going to go to FinViz real quick. I've got a couple of watch lists there. I go to the screener, go to my drop-down list. Oh, that's right. This doesn't... Oh. When the webinar's on, the drop-down menus don't work so well. So I'm going to my list, and it says weekly options. Now, this might be a little dated. There might be some stocks that no longer offer. But if let's say these are the 20 stocks that I want to trade, then I just go to the thumbnail charts. I check these every day. Why? Because on this list, I want to find the AIGs that are going to break out, the Apples that are going to break out, the American Express stocks that are going to break out, the stocks like Boeing that are near support in a coiling pattern that might start to turn up towards their highs, even though that's not a very volatile stock. Which of these stocks might pull back? Which stocks are setting up to break out? I want to be able to visually see all that. I mean, F5 breaking out of a base is going to be an interesting setup. There's going to be a nice little spike there. I've got to be able to visually see the setup and then just kind of sit back and patiently wait for these to happen. So buy early in the cycle. If you can, buy, Thursday or Friday, the week they're issued, or Monday or Tuesday. Once you get to that Wednesday point where you've got one day until the next weekly options become available, that's the gray area in trading. Because either I've got to be confident that this stock is moving now and it is going to move in 3 days enough to justify the trade, or if I'm not so confident on the timing, I might just wait till Thursday and then buy the new issued options there that have 8 days. It's always good to side on having more time. So if you find a trigger for what your trade setup is, well, then the next stop would be to develop the plan. Okay, here's my trigger, so now how much am I going to buy? What is my target? Where am I going to sell it? Well, what happens if it keeps going higher? What if it doesn't get to my target? What if it goes against me? Where am I going to stop out? All those things. And so then just from a daily perspective, you monitor stops and price movement daily. Just follow up with your trade and make sure that it's working as you want it to. More importantly, though, always be looking for the next opportunity. I spend more time during the day looking for new opportunities than I do watching the stuff that I have on. I mean, I spend a lot of time watching the stuff that I have on, but I'm always looking for the next trade and watching setups develop. So here's a couple of tips, okay? Having a trade plan for each individual trade is a key to success. We all know that. That's not specific to weekly options. But your time horizons. You know what? I do a lot of analysis on a smaller time frame, on 30-minute charts. I've always done that. I've done that for a decade. If I'm not using a daily chart, I dial it down to 30 minutes. So I can kind of see what the pattern looks like a little bit sharper, identify support and resistance levels a little bit better. You might even choose to do that. You might even avoid staying off the daily charts and then staying on a 30-minute chart or a 15-minute chart to catch a big move. But I got to tell you, the most critical element here is stock selection. Okay? I will tell you this, when it comes to weekly options, monthly options, leap options, any option, your success in trading options has very little to do about the options themselves. Okay? Your success in options has more to do with the stocks that you trade and when you trade them. I'll just go ahead and say that. Some of our upcoming sessions will be on how to select stocks and how to time trades, so that we can get better at the vehicles, which are weekly options, monthly options, spreads, etc. For directional strategies, pick stocks that move more than your average stock. Okay, stay away from your Dow components. Those are 30 stocks I never trade options on, right? But I love this quote right here. Buy with purpose and a good reason. Don't buy something just because the market's up and the stock is up, okay? That's amateur stuff, okay? We want to find the stuff that's maybe not up, but that's going to be up. And you guys kind of watch me do that day in and day out. I'm picking the stuff that's going to be the next mover. When I'm on, I have a keen ability to pick the stock that's going to be on the top 10 list tomorrow, the top 10 performers. That's the skill set that we've developed over the years trading this style, is good stock selection, right stocks. But buy with a purpose. Why are you buying this thing? Because you think it's going to go up? Why do you think it's going to go up? Or why do you think it's going to go down? What's the reason behind it? Multi-layers of analysis. We've got to get deeper than just, there's a trend line. I drew a line on a chart and the stock's, magically going to grow 10%. It's got to be, where are the buyers going to come in? Where are the stop orders going to get triggered? What's the short position looking like? Where are the sellers going to stop out? Those kind of things we really got to keep in mind. And that's how I've come to analyze stocks, is in kind of in that manner. So, so that's about it, guys. Like I said, I wanted to make a short video tutorial on options trading strategies. Not all of these are going to be done via slideshow. A lot of these are going to be done, through live trading examples. Today, being that weeklies are expiring and we don't have a new series issued because it's, September expiries and now in 1 week. There's not much to look at online. But again, like I said, we'll follow up with the strategies that will complement this going forward, and this should act as a good resource going forward. So thanks, guys, for allowing me to get through a quick presentation here. Look for these every Friday, and hopefully some of the things we've talked about here will help you strategize more in trading weekly options. Thanks, guys.